today we are going to be looking at doji candlestick. So in this video we are going to be looking at it extensively. We are going to look at the meaning of doji candlestick, how to identify doji candlestick, what it signifies, either the information it points out to us in decision making. Now let's go to the class properly. The word doji came from a Japanese phrase meaning the same thing. So doji candlestick is one of the Japanese candlestick pattern that look like a cross. It has the opening and the closing, at the same price. A doji shows you the state of indecision in the price trend in the forex market. And as a trader with proper understanding of doji candlestick, it will help you to know where to enter the market and when to exit the market. Types of doji candlestick. We have 5 types of doji candlesticks. We have the long leg doji, we have the dragonfly doji, we have the gravestone doji, we have the 4 price doji, and we have the doji star. Now these are the 5 types of doji. We're going to be looking at them one after the other intensively. We'll start with the dragonfly. Dragonfly is a bullish reversal candlestick pattern that is formed when the opening, the day high, when the closing price are at the same level with a long tail pointing downward. And whenever I see a dragonfly, what should I be expecting? A dragonfly gives you a signal that the market price or the market trend may undergo a bullish reversal. So when you see a dragonfly doji in the market, it is giving you a signal that this market that has been on a downward move is about to take a bullish reversal. You must confirm it with 1 or 2 candlesticks. Then after the confirmation, you can enter a trade and maximize your profit. Now let's look at number 2, the gravestone doji. A gravestone doji is a bearish reversal candlestick pattern that is formed when the opening, the day low, and the closing price are at the same level with a long tail pointing upward. A gravestone doji gives you a signal that the market price may undergo a bearish reversal. So, like I said before, you must confirm it with 1 or 2 candlesticks, then you can enter your trade. Number 3, the long leg doji. Long leg doji is a type of doji with the opening and the closing equal, and the day high and the day low equal. I want you to know that long leg doji is not a price reversal pattern. I want you to know this. A long leg doji marks the beginning of a consolidation period in the market. Now at that period, the activities of the buyers and the activities of the sellers are now equal. Because they are equal, the market is getting saturated, and at that saturation point, the market will be thinking of changing another pattern, and at that period, it simply means wait to a trader. So when you see a long leg doji, don't be in a haste to do what? To initiate a trade. Wait and see the outcome of the market before you can initiate a trade. Now let's go to the next one, the doji star. Now I want you to understand this. A doji star is not a bullish candlestick or a bearish candlestick. Now I want you to also understand that a doji candlestick is not a price reversal candlestick on its own, but it can give you a price reversal signals when combined with 1 or 2 candlesticks. Let's go further. Now when a doji star combines with a bullish and a bearish candlestick, it either forms a pattern called the morning star or the evening star. Now it is the new pattern formed that now gives you the reversal signal. When a doji star forms a morning star, it tells you that the market that has been on a downtrend is about to reverse to the uptrend. But when a doji star forms an evening star, it tells you that the market that has been in an uptrend is about to reverse. Now let's go to the next one, the 4 price doji candlestick. Now the 4 price doji candlestick is a candlestick pattern which has the same opening, the same day high, the same low, the same closing. Now whenever I see a 4 price doji, what is it trying to tell me? A 4 price doji doesn't occur easily like that. Now but whenever it occurs, it shows you that there is very little or no activity going on between the buyers and the sellers in the market at that very moment. At that point now, the market has gotten to the stage of liquidity. So I advise you as a trader, because there is no activity, just leave the market, come back when the market is viable again. When activities are started going on, then you will know which decision to take, either to join the buyers or to join the sellers. On this note, we have come to the end of today's class.